Can everybody hear everybody? Grittani's there. Can you hear me, Tim?
Yeah, I'm good.
Tim Grittani, the man, is here. I can't wait to do this. I've been really just excited for this day when, you know, every $1 million that you have, it makes you, I don't know what the right word is. What do you feel right now that you just passed $3 million in profits?
Uh, Combination of proud and relieved because I was stuck above two for a while.
Exactly. I mean, you never know when your next trade or when your next profit is going to come. But given your strong start, I'm sure that it's definitely um, been a relief for you with your recent success.
Yeah, there was kind of a rough, especially a rough 2 months towards the end of last year. But really, it felt like about a year. Where I kind of said this in one of my monthly recaps I did on YouTube, where if you like looked at a 1 year period from like the day before I took this huge PBMD loss in May of 2015, or yeah, 2015, up until like early May 2016, like from that date to that date, I like netted about break even. So it's kind of a weird stretch for me. But
Well, we have a lot of people who don't know your story, so let me just refresh it or recap it really quickly. This is Tim Bertani. He's definitely my top student, and he's become a great trader in his own right. He doesn't rely on picks from me or anybody. He's totally self-sufficient, and that is my goal for every single student. I never want you to follow picks or alerts from anybody. I want you to stand on your own 2 feet. That said, when you're beginning trading, the vast majority of traders lose money. It's very scary to trade these fast moving stocks. You have to find your own groove. And so we started this webinar, and my hope for it was that Tim could explain a little bit about his journey from starting with just a few $1,000s of his own money and now turning it into over $3 million, and really just taking us through the ins and the outs, the ups and the downs. He's had some months where he hasn't made money. He's had some times where he's lost money. He doesn't win 100% of the time. No one does. If anybody does claim to win 100% of the time, they're lying. Trading is very tough, but I do want to, or hopefully show with Tim's story here today that, great success is possible. This is not, something that's due to luck. This is not fraud. This is strategy and hard work. And I believe anybody can do it, but you do need, a guide and ideally a role model and an example like Tim Gattani. So, Tim, I was just wondering if you could explain a little bit about your story from the beginning and just what you learned over the past few years, and just try and put yourself in the shoes of a lot of people who are watching this, who are just beginning, who are just kind of looking to see how to do this, and how to really try and grow their accounts exponentially.
yeah, sure. So I mean, I guess I'll start back even before I really started trading. I mean, I was still in college. I was going to Marquette University, finance major, and didn't really like the major. Didn't know what I wanted to do with it. But I'd always kind of had the risk averse personality where for a while I was really into poker. For a while after that, I got into football betting. And then just kind of went to the stock market from there because that was the side of finance that really appealed the most, was just something that would be interesting day to day. Long-term financial planning stuff didn't really appeal. And at this point, I think I had about a year to go in school. I wound up graduating a semester late because I had transferred colleges halfway through. Um, and it was really beginning of 2011, about February, where I decided to join penny stocking silver and just start learning right there and just dive into the penny stock side of things. And that appealed because I was into the volatility of penny stocks. I didn't like the idea of stocks like Google and Apple where, after a week you might be lucky to make 4 or 5% because I was trading $1,000, $1,500. And what good is 5% over a week to a $1,500 account? That's not going to grow fast. You're not going to make any kind of real money off of that. And I guess that for the first 3 months between February and May of 2011, I wasn't even trading. I was just learning. I was just studying. I was watching video lessons. I was just trying to absorb it all. And I think like a lot of people who start off and join a service, I wasn't even necessarily, I mean, like I did want to learn, I did want to be self-sufficient, but I also wanted quick money because I didn't have a lot of money to my name at that point. I think I had about $1,500 to $2,000 to my name. So I wanted to grow that obviously, and I wanted to do it quickly. So I had joined with the idea of, okay, I'm going to learn, but I'm also going to follow trade alerts, and I'm gonna use these trade alerts to jumpstart my account. And I
And
was
that is the wrong mindset. I just want to be very clear. No hot picks, no fast money. Continue. Sorry.
100% the wrong mindset, and it led me nowhere. Because that was the bulk of my trading for about the first 2 months I did start trading. May, June, July. I'd say in there, all I was really trying to do was follow trade alerts. And that summer, I was also juggling trading with a summer job at State Farm. So that was kind of complicated too. I get the question a lot: how do you, juggle day trading and working a full-time job? And I really don't think that it's practical to day trade with a full-time job in a lot of cases, unless you have just exceptional freedom and access to a computer, because day trading is such a minute by minute, tick by tick thing. And if you don't have the ability to make those quick split decisions, you're going to get burned. And I did get burned a few times trying to do it. So for those of you working and you don't have a lot of computer access, I'd recommend maybe thinking about something that's a little bit longer term of a strategy. But anyway, so that first few months, I was just trying to follow alerts, and I think I netted out to about breakeven during those first few months. I really wasn't getting anywhere. And then I started to get a little braver. I started to branch out on my own, and I learned all these strategies that I was so eager to put to the test. But it was a little bit of information overload because I was just trying to do too much too soon, and I was trying to trade 10 different strategies. And during this time, I still was trading the $1,500 of my own money. But along the way, I had sort of slowly borrowed more and more money from my parents because I was trying to dodge things like the pattern day trader rule. So they gave me this money with the stipulation that, okay, you can have this money to keep the account open, and that way I could have 3 open brokers and 9 day trades a week instead of 3. But my position size could never exceed $1,500, or my own portion of the money. So even though I had their money to keep the accounts open, I was never trading. So I kind of want to switch over here to my profit lead chart really quick because I just want to show you what some of those early months looked like. And let me see if I can zoom in down here. This might take a couple tries just because. So such a ridiculous range, but you'll really see that in the first few months of trading here, there was not a whole lot going on in my account profit-wise. And this is good. This is a good zoom here. And this doesn't go back all the way, unfortunately. My first trades were back in May, and like I said, and at the time I was trading mostly through a broker called Thinkorswim, and they did a clearing firm change or something. So I really wish I could upload all those trades, but for whatever reason I can't. But the main thing I want you to see on this chart is that, like I said, I ventured out on my own. I started trying to do my own thing a bit more, but I was just trying to do too much and didn't really know who I was as a trader yet. And I lost pretty much my entire $1,500. You can see by the dip on the chart here. I was down, I think at worst, let's call it $1,300. But I basically blew up my portion of the account. And most of it came in early August. And it was just kind of a string of horrible trades, horrible ideas. And it was really demoralizing, but at the same time, I could see the mistakes I was making. And I had the faith that, okay, I can dig my way out of this, I can build back, I just have to kind of get disciplined. Because through those early losses, I was seeing, I had some winning trades too. I just so happened that my losers were bigger. But I was learning basically where I succeed and where I fail. And when I started to dig out of this hole early on and started to turn myself into a winning trader was when I basically just focused in on 2 setups. The 2 areas I was most comfortable, the 2 areas I was seeing the most success in my trading up to that point. And that was in the OTC market at the time, and it was OTC multi-day breakouts, and it was major promotion releases by OTC promoters. So from the period of about early September all the way until November and beyond, that's all I was trading. I really wasn't letting myself do anything else. I wasn't letting myself short sell. I wasn't trying to buy earnings winners. I was just trying to stick to where I was comfortable, stick to a very focused area. And I remember a few streaks in there where I would have 2, 3, 4 days in a row where I wouldn't even place a trade. And that was okay because the setup I was looking for wasn't there. And then in November, I finally got back to break even and I had my first big win. And my first big win was nailing an Austin Penny stocks promotion. That was one of the major promoters at the time. This stock that went from pretty much, what was it? I think it was 7 cents to 15 cents in the span of about 5 minutes. And I captured the meat of the move. I didn't quite get it perfectly. But that was, that was what kind of got me off and running. And the whole reason I was able to even continue trading was because I had worked that summer job at State Farm. And because I had traded so small early in my trading career, I mean, $1,500, that's not a lot of money to blow up. I mean, that's a recoverable amount of money by real world standards. And so I think I had made maybe $4,000 or $5,000 at my summer job. So I decided to reload and try again because I did have the feeling like I could grasp my mistakes. I could grasp what I was doing wrong, and I really wanted to give it one more shot. Now I had the benefit of, November, I did get off and running. I did get up into the profitable territory finally. And then in December, I graduated college that semester late and went straight from there back home to live with my parents. So I was lucky I didn't have the pressure of bills on me that first 6 months of my full-time trading career, because that would have been kind of tough back when the gains were still smaller, because it would have been like if I make $3,000-$4,000 in a month, most of that's going to come out to pay my bills because that was my only source of income. I didn't really have a lot of money in my savings accounts still. So it helped not have the pressure of big expenses early. But I kind of got over that hump pretty quickly, where my months started to get bigger and bigger. I kept on nailing early promotions. I kept on nailing breakouts. I started sort of slowly branching out. I went from buying to kind of learning how to dip buy some of these promotions on panics. And then I started learning how to short sell them. And I just kind of added one setup to my arsenal at a time. And by the end of 2012, I was up in the neighborhood of $100,000 or $150,000, it looks like.
And let me just interrupt for a second there, Tim. Because it's incredible the turn of events where you're like most traders for the first few months with very small gains or no gains or losses, but you turned it up a notch. And I was wondering if you could just talk for a second about what really made you change and adapt. What made you click? Because I think that's missing for a lot of people.
Well, the biggest part of that click was kind of what I talked about earlier with narrowing my focus and really figuring out who I was as a trader. And it's really tough, I think, because learning who you are as a trader, I think it does require you to lose a bit. And for a lot of people, those losses take them out of the game. And if you're trading too big, you're not getting back in because you're just too far in the hole. But like I said, I kind of had to lose trying all these different strategies and dig myself into that $1,300 hole before I could finally sort of say, okay, this is what I'm good at. And then it was just the discipline to remain focused in that one area and try to continuously improve on it day after day. And those days I talked about where I didn't trade, where I'd go 3 or 4 days in a row without making one. That would be kind of tough because I'd still be in chat rooms, I'd still see people celebrating the big plays of the day, and I wouldn't be participating. And especially for someone like me who kind of craves the action a little bit, it's tough to be on the sidelines. But it's what was necessary. And I guess you're right. Like going from being up $4,000 at the start of 2012 to $150,000 at the year. I mean, that's a big jump, and it's kind of a little bit of an exponential ramp as the year went on. And that was just because I got so comfortable in these couple areas that I was focusing, and I was so sure that I had an edge, and I knew that I was going to win more than I would lose. I was comfortable starting to push size. I'd played a setup, maybe thinking, okay, I'm going to lose $200 in January or February, and then a month or two later, I'm trading it with $500 risk instead. where I'm just slowly increasing the size because I have that confidence to increase the size. And that confidence came from seeing the consistency, seeing, the results proved it to me. The results were proving to me that what I was doing was working. So, if, as long as I can throw a little more size at it without putting my risk too large, why not?
So let me just try and understand this for a second. So you started basically, following alerts. You saw that didn't really make you a lot of money. You adapted to kind of learning your own strategies. Then you simplified what you were best at. Once you realized what you were best at, you just put more size into those positions, and that's basically the process.
Exactly, yeah. And I mean, you really cannot and should not rush putting that size on. It was a very slow and steady thing for me. Again, I wasn't going from 1,000 share positions to 20,000 share positions overnight. It was a slow and gradual build up, week to week, really.
Gotcha. No, that's very useful. Well, a lot of people, I think, really need to learn to simplify their strategies and get good at a certain few versus trying, 100 different strategies and, never really knowing what they're good at and never really being able to size up.
Yeah, and I mean everyone, and myself included in this. Like I pretty much everything I say that's kind of a generalization about what everyone's thinking. I think will also really reflect on what I was thinking at the time. But everyone's in such a rush to make it. I mean, I think everyone would love to wake up tomorrow with way more money in their accounts, but it doesn't work that way. Like you really have to think of this as a grind. It's a marathon, not a sprint. And I mean, that's kind of the thinking that helped me out too. I guess is I kind of realized that after a while and after struggling so much early. But it is frustrating early on because I mean, just because you need to figure out who you are and you do almost have to lose first, that doesn't mean like you should ignore learning these strategies. Like it's still worth knowing, it's still worth getting all that information early on. But then it's up to you to kind of take it a step further and figure out what applies to you and your personality and what can you best integrate into your own strategies.
Yeah, no, I definitely agree with that. Let me ask you, when you mentioned the grind and it's hard work, if you could tell people a little bit about your process of what you do, how do you really discover who you are and what patterns you like and what patterns you do best with?
Sure. Well, I think early on, especially for me, it was seeing where I won and where I lost. I mean, I encourage everybody to track your trades, whether it be on Profitly or if you want to be more private about it, just make an Excel sheet, do it by yourself, and just make a note of where you entered, where you exited, what time of day it was, what setup it was, long or short, just any detail you can think of.
How
And
many different spreadsheets do you have? I get this question asked a lot. I say 1,000 spreadsheets. Is
it's
my
not no, it's at least 10 though. I have quite a few spreadsheets for different things that I've tracked. But yeah, early on, I mean, I don't track my trades as closely now as I used to. But early on, I tracked them very closely, and it was really a big asset to me because, I mean, that was part of it, I guess. Seeing that I was succeeding more in the OTC market, seeing that I was doing better with my buys than my shorts. But the other half of it is just I got more comfortable there. I mean, I think everybody's a little bit different personally, and I know at least 5 or 10 millionaire traders, and everybody trades a little bit different. I don't believe that there's any one right or wrong way to trade the markets. You've got to cater this to your own personality to a certain extent and figure out what makes sense to you, what you're comfortable with. I mean, I'm terrible at patience. I can't hold stocks for more than a day or two at the most. I know some guys who can, short some garbage that ran really far and hold it for 2 or 3 weeks. I just can't do it. But they're very successful with it. So I think through your own trading, you're also going to start to get a feel for where are you comfortable? What is your niche, and really what can you just, I mean, I keep using the word comfortable, but that's the perfect word for it, because if you're not comfortable in a trade, you're going to be really emotional in it, and you're going to make bad decisions as a result.
Yeah, I mean, this is one of the things that I say over and over again. People say that they're scared about the stock market or that, it's scary or that they're uncomfortable and, they're not ready to trade big. And I say you should always be comfortable when you're trading. If you're uncomfortable, then trade small or even paper trade, but get to a level where, every trade is something where it's like, oh, I'm just repeating a process that I've done many times before, and I'm very comfortable, so that even if you lose, which happens sometimes, you have the proper expectations.
Right, and I do want to touch on one more thing for the early success that I think kind of helped make a difference for me. I think a lot of people are really, really uncomfortable with the idea of taking a losing trade. I know I was. And part of what clicked for me was when I realized it's unavoidable. You're gonna, even if you're trading your niche, even if you're trading your favorite setup, there's going to be times it doesn't work. There's nothing out there that is 100%. You're never gonna have that certainty in a trade. So you need to have a good risk plan. And that's a big part of what helped me out as well, because especially back in my early days, and part of my little slump in 2015 was that I got away from this, but I was really, really good about cutting losses in that first 2.5 years of my career and knowing my plan. And I mean, if you happen to be in one of those breakouts that sucks and doesn't work, you know what? Like, it's going to be a small loss, but if you know how to control it, if you know how to build in appropriately, if you know how to, to make sure it doesn't get out of hand, there's absolutely nothing to be scared of.
No, I agree 100%. Some of my best trades. Oh, I've got software going off. I've got trade alerts. Sorry. This is really a live webinar. But, what I wanted to say is some of my best trades are actually losses. And it's very confusing for people because, you want every trade to be a profit. If you have a loss, then obviously, you're not happy. But some trades just aren't going to work out. And if you learn to manage trades that don't work out well, you can manage anything. And you can really tackle, all the problems that most traders have. Most traders can't let a small mistake just be a small mistake. They somehow want to hold and hope, and those small mistakes can turn into big disasters.
And what I also want to say about losses is that, like, it is my number one best learning tool. Like, a lot of people, I think, want to ignore their losers. I say embrace them. Like, figure out everything you can from your losses. I mean, look at it, and sometimes it'll just be one of those great setups that didn't work, and that's fine. There's really nothing to learn there. You followed your plan. You stopped out when you were supposed to. But what if it's one of those trades where the loss ballooned on you because you got stubborn, or because you decided to start trying to add to a loser, and you kind of started trading outside of your plan? And those are the ones where you can learn a lot from and learn a lot about yourself. And you got to figure out, did you make a mistake, or did the setup just not work and you followed your plan and that was okay?
Excellent, excellent point. So, I'm looking at your chart here. 2013 was awesome. 2014 was awesome, except for the blip at the end of 2014. Can you talk about that?
Let's see. Oh yeah, that was your fault, Tim.
I get blamed. I understand. It probably was.
That wasn't your fault. That was my fault. But that was a loss on American Airlines, and that was one of my first really big losers. That was, I think, a $50,000 drawdown. And I mean, I had been trading for most of 2013. The two main stocks I traded were Fannie Mae and American Airlines. American Airlines at the time was bankrupt. They were trading on the OTC market, and both of these were just very liquid OTC charts with a ton of opportunity. And I got very comfortable trading them. I got very comfortable trading them with size. And one day it just so happened on American Airlines that I was in a trade on it. And I believe I was short something like 20,000 shares. And at the time, the stock was trading around maybe $8, $9, $10. And then some sort of press release came out, some sort of news. I think, there was all kinds of court stuff going on at the time. And I just kind of got caught in the news with that. I didn't really realize what was going on until it was too late. And with an OTC, executions are always a little bit of an issue and difficult. So American Airlines started spiking on this news, and I froze. So that was my fault for freezing. And I wound up having to cover into a pullback after about an hour of it getting up to, I think, about $13. So, yeah, I think I was short from about 10 and it got to 13. And I covered into a dip in the 12s. So it wound up being about a $50,000 loss. The reason I blamed Tim was because he had been planning a trip out to visit me for when I broke the 1 million mark. And he felt really bad about it because he thought that I was pressing, trying to make it happen sooner. But no, it wasn't. It wasn't your fault, Tim.
I'll take responsibility for that. I brought the camera crew to your house, and I was like, "We're gonna capture you passing $1 million on camera," and then you had that big loss, and I was like, "Oh, maybe I shouldn't have brought the camera crew."
Yeah, and I bounced back really fast from it. It looks like I can't really remember the specifics of how I bounced back so fast. I'm just guessing there were, probably Fannie Mae did something cool. Like, Fannie Mae was a lot of fun that year.
Well, now that you're talking about Fannie Mae, can we talk about this big spike that you had from just a few 100,000 to nearly 750,000?
Yeah, and that was a huge. I mean, that was a huge day for me in more than one sense.
I was in Japan filming when I heard that you had made over $200,000 in one day, and I couldn't even believe it at the time.
Yeah, I did a guest blog post for you. I think it's titled I can't remember what it's titled, but that's something about making
I made $200,000 in one day.
Okay, but yeah, I know I really detailed how I traded that in there. But long story short, on Fannie Mae, it had a very similar pattern back in March, and I traded it well in March. I remember I had something like a $17,000 day on it, and I came away from the day really disappointed because I felt like I traded it wrong. It was one of those parabolic charts where the stock runs for 3 or 4 days in a row, and then it has this huge crash and bounce. So I kind of messed it up in March, but still made good money. But then it did it again in May, and it did it from even higher levels. And so I was ready for it this time in May. And I basically nailed the short before the huge crash, then covered everything up on the way down and played a pretty sizable position on the bounce. Right, I bottom ticked the bounce and sold it up for almost, I think it was like a 70% gain on the bounce. And then shorted again into the bounce and faded it back off another dollar or something like that. It was just a wild day with a few huge trades that all added up. Very clearly here. I mean, it was something like $290,000 or 270. I can't remember.
And what did you do to celebrate?
I can't remember now. It all runs together.
What did you do to celebrate? I love this story.
The celebration was I went out and had a meatball pizza with my now wife. So that was fantastic.
Well, what was the name of the pizza place? Mellow something?
Mellow Mushroom.
Yes. Yes. What did you do when you passed like 2 million or 3 million? Did you have more pizza?
I don't even know if I really celebrated. Man, I don't even know if I really celebrated it, to be honest.
It's just getting old at this point, isn't it?
Oh, my wife's reminding me. Hang on. Oh, we got truffle fries for 3 million. Oh, we got truffle fries for 3 million.
Ooh, you're upgrading your toppings.
That's right. Yeah. But at Fannie Mae, it was also really big for me to nail that because I don't know, it was kind of just an eye-opening moment for me. Almost in the sense of, it was just such a perfect pattern, like perfect run up, perfect smooth panic down, perfect bounce. And I don't know if it was like for the first time, but it really ingrained in my mind that like a lot of these big overextended crashes, they might be a little choppier than Fannie Mae was, but it really plays out so similarly in the end. I mean, most recently there was MGT, and MGT, I mean, that's a listed stock, and that reminded me so much of Fannie Mae, the day of that big crash, from I think it was like $5 down to 260 or 270 or something like that in the span of minutes. It was ridiculous.
Yeah, I mean, it's kind of crazy how these patterns repeat. Jesse Livermore famously said, the patterns don't change. The stocks change, but human nature never changes. So the patterns don't change, and I think that's what we see a lot, especially with these low price stocks, which are kind of insulated from the changes that we see happening with high frequency trading and bigger stocks. I don't know if it's you but I don't see that much competition down here in terms of like algorithmic trading or computer trading. Can you speak on that for a second?
I see it more on the NASDAQ market than I do with OTC stocks, for sure. I think the NASDAQ stocks are a bit tougher, but it still does wind up being the same patterns, like we just talked about with MGT. But yeah, I mean, the competition isn't there quite like it would be for trading something like Apple or Google. And the volatility is incredible. The opportunity is incredible. I mean, Fannie Mae, the big Fannie Mae day that I traded, I mean, that run had been from a few days up from, I want to say, $1 to $5. And then in one day, you had a 50% tank, 70 or 80% bounce, and then another 30 or 40% tank. And I mean, with that kind of volatility, you can screw up and make money. Like, you don't have to be perfect. And that's what drives me crazy. I see people in chat rooms a lot of times trying to trade these stocks. I mean, they might even look volatile to you. I mean, they might be like this. I see people trying to trade like $30 stocks that are trading like a $1 range. And I'm sitting there thinking, like, you realize that, like, if you nail the exact top and the exact bottom of this trade, you're going to make 3%. Like, you have to be perfect to make 3%. That makes absolutely no sense to me. Why do you even bother there?
Exactly. I'm glad you brought up the volatility because I wanted to see if we could talk more recently. I know you had a $140,000 profit in June, and then maybe we could talk about right now some of these very volatile stocks like LEDS, BGI, these stocks that are going up 200, 400, sometimes 800% in a day. And just to get your thoughts on that, on kind of like where the opportunity is right now.
Sure. I mean, the opportunity definitely shifted from when I
Can you
first
pull
started
up a chart of BGI or LEDS so people can see?
trading. LEDS, absolutely.
Oh, that was a beauty today. Every single day, literally, LEDS was today, TRCH was yesterday, and BGI was the day before. So pretty much every day we're having a supernova, which is, this is very rare. This does not happen often, but it's been happening quite often the past 2 weeks.
Yeah, so LEDS today. I mean, a low of about 450 up into above 11 right before the close, and then it pulled back towards 10 before it closed. But you're right. Like, these runners are incredible. We've seen a lot of these over the past 3 months, and that's part of the reason my past 3 months have been a little bit better, is because the market has picked up a bit, as well as improving upon myself over the past 6 to 12 months. But yeah, I mean, and the funny thing is, I'm terrible at buying these things. I usually just watch them the whole run up, and then I short sell them when I feel like the time comes. And that's part of what I was talking about earlier with, you have to be willing to sit on the sidelines sometimes. I don't need to nail the upside of all of these because I'm just not comfortable. I've become much more of a short seller in recent years, to the point where, like I said, I'll just watch these things run. And yeah, maybe I'm missing some great opportunity on the way up, but I'm sure I'd just botch it on the way up anyway, because I'd be in the trade and I'd be really uncomfortable and emotions would be high. So I stick to the part of the move that's comfortable to me.
Yeah, I agree 100%. Pull up BGI. I was buying this at $1.20 the other day, and I sold it at like $1.50. Pull up like a 3-day chart. Yeah. So I bought it. I made 20% on my pick, right? Inside of an hour, very good. And then it goes to $5 a share later that day, and people are like, "Why did you sell too early?" But for me, when I make 20%, that's like near best case scenario. You'll never see me make 2, 3, 500%, and that's what I'm comfortable with.
And what people ignore too is that, only maybe 1 out of 50 run like this. Like, it's, most of the time taking that safe profit is the right way to go. And that was my mentality with the early promotions when I was growing my account. I was looking for a very specific part of the move when a major promoter announced a new promotion. And I'd usually be flipping out of this stock for maybe 40 to 50% gains most of the time within 10, 15, 30 minutes. And sometimes it would go on hundreds or even thousands of percent run within a week or two. And I missed a lot of those. I was not there for the whole opportunity, but I didn't give in to greed. And then you would have the occasional one where it would just decimate everybody. It would have that brief spike, the 30, 40, 50%, and then just get drilled down to zero. Like, it would just get absolutely demolished. And all the people who would ride the ones up that 1,000% over the course of a couple of weeks would be stuck holding and hoping and getting slaughtered on the ones that didn't work. So there's a lot to be said for just sticking to a smaller part of the move, the part that you're comfortable with, again and again and again. And you know what? Like, if you're on the sidelines for the rest of it, so be it. Like, this is volatile enough that, again, just even a small piece for you was, you said 15 or 20%.
Yeah,
So
I made 20%, and I was thrilled. I don't regret selling too soon at all today. I had another play BLIM, and I made the same roughly 20%. And on that one, it did not continue to run. So whether it runs huge or whether it doesn't, I make my 10, 15, 20%, and I'm very happy. So I've learned to take the meat of the move.
right, and almost all of what I do is based off of chart patterns. I mean, I'll pay a very slight attention to what the news is, and if there's possibly like any earnings coming out or anything that can mess with the play. But I'm trading off of charts, and I'm trading off of familiar chart patterns. And whether it's a good company or a bad company or a pump or not a pump, any of that, it all becomes irrelevant. What matters to me is the familiar chart and the part of the move that I'm comfortable with. I mean, my biggest day ever was on Fannie Mae, and Fannie Mae that's a real company. I mean, that's not a pump, but it had very pump-like price action. It had the big parabolic chart. It doesn't matter whether it's legitimate or not. Like, if you're a day trader, you need to be focusing on the chart. You need to be focusing on what the money is doing, because that's kind of what the chart really is. It's a story of what is the money in the market doing with the stock.
Yeah. Let me take some questions. We have a whole bunch of questions from people, but this relates to your point I think that you're making right now. Um, let's see. Gerard from Minnesota asks, is it bad to buy bad companies, and is it okay to short good companies?
Uh, and my answer is it is not bad to buy bad companies. It is definitely okay to short good companies. Like I said, I'm playing the chart. I'm playing the trend. I'm going for the part of the move that makes sense to me. Here, I've got one to show really quick. VMRI. This is a terrible company. This is a pump and dump. But I bought this when it had a multi-day breakout past the 170 area.
I bought it that day too, but you had more patience than me.
Right, yeah. I mean, it's just recognizing it's a breakout. I don't care that it's a pump and dump. I don't care that it's a scam. I mean, bad companies can run. We see it all the time, especially with these micro cap stocks. So again, eventually it will matter to bad company. Eventually, this is going to probably slowly downtrend and eventually be worthless. But for now, there's money controlling it, and you can take advantage of that.
All right, we got another question from Adam in Florida, and he says, I just started trading 2 months ago. What do you recommend me to do over the next few months so that I too one day can become a millionaire? Whew, that's a tough one.
That is a tough one. I mean, first of all, keep it small early. You want to trade small for quite a while. I guess I didn't start increasing my size until after my first big win, which means I traded small for 6 months. And it's so important that you keep that size small early, because that is when you're learning about yourself. That is when you're taking losses. That is when you're kind of experimenting with different strategies and figuring out who you are. And you don't want to wipe yourself out beyond recovery. So keep that size small, get that market experience. And I do think it's good to do it with real money, because paper trading, you just don't experience the same emotions if you don't have money on the line. That's part of the story I left out, is that I paper traded for a while before I placed my first trade in May of 2011. And every single trade was a winner, Tim. It was awesome. And then the reality hit of having the emotions involved when there is real money on the line. You face the potential of possibly losing. It was terrifying. And my heart rate was jacked up every trade. I was shaking sometimes. It was ridiculous. So that's definitely part of the beginner learning curve too, is learning to overcome that.
I think it's night and day too, where when there's actual money at risk, you're training yourself. It's kind of like I guess you can make like a soccer comparison where it's like a friendly match and it doesn't really matter versus the World Cup where the whole world is watching you. And you have to train yourself emotionally, because what people don't realize is not just about success is not just picking good stocks. It's training yourself emotionally to, A, cut losses quickly when you're wrong so you don't have the big disasters, and B, some of the best plays like VMRI are the worst companies, so it's counterintuitive, and you have to train yourself emotionally to take advantage of it.
Right. And I have the very cynical approach where I kind of just assume all companies are crap, and that I think
You're
that's
never
part
disappointed that way.
that's definitely part of the reason it's harder for me to buy on the way up. I think, but it usually proves to be true. I mean, these micro caps are cheap for a reason.
Well, VMRI, I mean, I'm glad you brought this up because I bought it at 170. And, for me, I'm like a coward trader. I admit it. I sell too soon, far too often. This was one where I nailed the breakout and I bought it in the 170s and I was out in the 180s because I couldn't break 190. So, could you explain? You were actually giving a webinar that day, and I was listening to your webinar for Trading Challenge students, and I was shocked that you had the patience to hold it. And obviously, 24 hours later, it went to the threes. What gave you that kind of patience that I didn't have?
And it's funny, you talk about my patience. I don't think I made it past 230 with any of my shares, or maybe a few.
More patience than me.
Right, but I'm saying even I was out early. And what it was, it's just trusting the setup. I mean, I have seen enough OTC multi-day breakouts at this point where I know that more times than not they're going to succeed. And when I fail, if I sized inappropriately, if I picked a smart risk level, my loss is going to be smaller than most of the gains I would make. So I mean, even if it was a 50-50 setup, I'd be coming out ahead on it because the risk reward is in my favor. So I mean, it was patience from that aspect of knowing the setup, trusting the setup. But, then once it's a multi-day breakout, once it's past that 170 level, I'm not necessarily just sitting back and saying, oh, it's going to work. I'm still watching that 1 minute chart like a hawk. And I'm watching the action unfold and I'm looking for anything that might make me feel uncomfortable or make me feel like, okay, this trend might be changing or there might have just been a key support snap. And in this case, it really just it got to 230, which was about a 30% move past where I bought. And I just kind of decided that was good enough. And I paid myself into strength. I didn't give it a chance to get weak on me. And also, I wanted to position myself to be able to short it later. And it's a lot easier for me to start thinking about shorting something if I'm not currently long.
Yeah, 100%. And how'd you do on the short on this one? This is a cool little story.
Yeah, this was one of my better trades of the year because it closed up near 270 on that day where it did break out, and then the next day gapped up to 280, spiked up to 340 in the morning. And I can probably pull up a 1 minute chart of this. Give me just one second. What day was this? June 28th. Let me get a 1 minute chart of that up really quick just to explain that.
I remember you posted a nice screenshot of your gain. I could actually not find shares to short. I wanted to short it, but that is something that I think all of you guys listening in should know. You can see that the stock is going to drop and you'll be there. And sometimes there's just no shares to short. Tim Grittani found the shares to short on this one. Explain what happened.
Sure. So, I mean, I think there comes a point where people, you kind of wonder when does it stop being a breakout that's a bullish pattern and start becoming an overextended chart that's a bearish pattern. And for me, I mean, since it was up at 340, already a doubler from the breakout spot, that was the first things was that it was getting very extended. It was already up a ton. But I kind of got aggressive. I was shorting a little bit into this first morning spike here in the first 10, 15 minutes of the day. I started in at about 320. I think I had 10,000 shares at 320. And then once this second bounce right here failed and started setting a lower high, and it couldn't break past the initial morning high of 340 or whatever it was, I started adding in. And it had this nice hard crackdown. It set a lower low. And I shorted even more into this little rebound up here, back into the low threes. And then it finally rolled over and snapped, went red on the day, and had this huge panic. And I didn't trade it perfectly. I covered most of my shares around 220 because it had a little fake bounce here on the level 2 action. But it was a $25,000 gain, which was one of my best of the year so far. So it was definitely a fun trade, and kind of a throwback because I miss these old OCC patterns.
That's awesome. We got another question. This is from JC in Australia, and he was just wondering how you structure your day. Are you in front of your computer throughout the entire trading day, or sometimes do you leave? And what's your schedule at night when you're researching too?
Sure. So my day schedule, it's pretty consistent. If I'm in something overnight that I really feel like needs extra watching, I'll be up for 8 a.m. Eastern. the start of really, I consider 8 a.m. Eastern the start of like the real pre-market hours for listed stocks because that's when volume finally starts to kick in a bit. But most days I'm up about 8:45 Eastern time and give myself about 45 minutes just to wake up, get my head in the game, look at charts and how everything is gapping. And then I'm in front of it pretty much all day up until market close. Stepping away here and there. Some days I'll take a 5-10 minute break just to kind of clear my head if I feel like I need it. And then at the end of the day, I'll usually tweet out a quick watch list, stocks I'm looking at for the next day. And then later that night, build more detailed plans for myself where I'll actually run my scans again, make sure I didn't miss anything. And that process usually takes 15 minutes. Just running my scan, pulling up a chart, seeing if I like the chart from scan results. And if I like it, I add it to the watch list and I kind of type in my plan for what I might want to do with it the next morning.
Cool. We got another question from Matt in New Hampshire, and he says, Tim, I'm a big fan of trading tinkers. If you can just explain a little bit about why you made this DVD and what you wanted to really, what was your goal with this DVD, and do you think you succeeded?
Yeah. So I mean, I like to teach. I really do. And I've had my blog. Oh, and I'm going to sidetrack for just a second here because I know a lot of people email me asking for my stock promoter list and my level 2 videos because they saw that in my Vegas speech from 3 or 4 years ago. And that email is out of service at this point. So everything's on my blog, tradetheticker.blogspot.com. That's where you can find that stuff. And that blog, for a while I was doing these blog posts. I was trying to explain like some trade recaps, explain certain strategies, answer FAQs. And to be honest, I just couldn't keep up with it. It was a little too much work for me, especially after a long trading day. I don't quite have your energy, Tim. And so
very few people do.
I burned out on the blog pretty quickly. And I never wanted to run a service. I hate the idea of people trying to follow my alerts because, my experience from what I've seen in chat rooms is no matter how much you tell people don't follow, they still follow. And, it's a service, again, it just wasn't really for me because you've got to be really committed to that. You've got to put in a lot of time. You've got to answer a lot of questions. And I didn't feel like I could commit that kind of extra time outside of market hours. So that left me with the DVD. And that's why I went down that route because the DVD was something where I could basically tell my story, explain all of the important lessons that I felt like I had learned early in my trading career, what helped me succeed, and then just show my strategies and show my favorite chart patterns, show some live trade examples, and that way people could actually see what the trade looks like in real time as the chart develops, and not be busy trying to tail me at the same time because now at this point the trades happened a year ago. So it just seemed like the best way to teach everything. And it was a big workload for 6 months. It was a huge project, but I get to kind of keep my freedom outside of market hours now, and that's out there. And I'm really proud of what I wound up accomplishing with it.
You should be proud. And I got to mention, Dustin, I don't know if you can put up the link to Tim Grittani's DVD. For those of you attending, we're giving a special price, $1,000 off with this link that my teammate Dustin is about to post. This link will be valid for just 48 hours. His DVD is regularly $1,800, but it is so filled with so many useful tidbits and live trades. And, as Tim Grittani just explained, he literally put in nearly half a year into this. It's by far my favorite DVD, beating even my own. And I'm kind of a egotistical guy, so that says a lot. It's also the #1 rated DVD on Investimonials. So, just on behalf of everybody, Tim Grittani, thank you for putting in so much work and effort into that. I know many millionaire traders, it's a lot of work to kind of self-reflect and to take time out after hours. You want to live a little. I mean, you have a great new wife, Donna. She's awesome. So on behalf of me and just all the traders out there, thank you for this great effort. I think it's incredible.
Thanks, Tim. Yeah.
So yeah, check out that link. I should also mention that Tim Grittani, for doing this webinar, he is also one of the instructors on my trading challenge, and he gives webinars to trading challenge students. We're going to send you guys an email follow up to show you one of his live trading webinars for free, so that you can get an idea just of how he trades and how he's actually an incredible teacher. I'm glad that he likes it. It's tough to teach him, trade and talk and kind of multitask. But we're going to send you a follow-up email either later today or tomorrow with an example of Tim Grittani's live trading webinar, so you can see what my trading challenge students receive between Grittani's live webinars. I do live webinars, and my first millionaire student, Michael Good, also does live webinars. Have you tuned into Michael Good's webinars at all, Grittani?
Yeah, I have before. He did some good ones back in the day on some of the OTC stuff back when promotions were hot.
Yeah.
I learned a lot from Mike about order routing and stuff like that. He's a speed trader.
Yeah, no, he's incredible. And I was watching one of his, all these webinars are archived, so I was watching one that one of my students sent me because he favorited it. And, Michael Good had like a crossbow. Did you see that one?
I didn't see that, no.
He was like practicing. One of my other students, Tim Bowen, who's a part-time trader, likes to hunt. And so he was teaching, Michael Good how to hunt. And I was like, just don't shoot yourselves. Like, I need you guys alive and healthy.
Michael Good with a crossbow. I'm not sure I'd let him have one.
It was kind of scary with the crossbow. I gotta say, I was watching the webinar and I'm like, please put the weapon down. I'm not a big fan of violence. But these webinars are just a way. I mean, this is just kind of an intro webinar with a little Q&A. But I really like the live trading webinars so that you can see how quickly we act. This is my own question for Tim Grittani. How quickly do you react, like when you see, let's say you're long a stock and there's like a double top, or you're shorting a stock and the stock makes new highs where maybe you didn't think that would happen? How quick are you to exit the position, or do you maybe not even exit the position? Do you give it a few seconds or minutes to really, break out or break down convincingly?
That's really case by case and what the entire chart looks like whether I'm going to just immediately cut or give it a second to test. But I'm always ready to act in a split second. I have these hotkeys keyed up on my computer where basically I just have to push a button and my position's closed. So it's a lot simpler than having to fill in like 5 different fields in an order box and then click and toggle between windows and all that. I'm always ready to get out if I need to.
Well, I think that's a good point, and it's important because I give these live webinars to challenge students, and like I exit sometimes if I'm in a stock overnight, I'm in it for a gap up or a morning spike. It doesn't gap up or it doesn't spike, and I'm out literally at like 9:31 a.m. Eastern, like within 1 minute of the market open. And some people are surprised. I want to be in good positions where the stock is doing what I think, and if it doesn't do what I think, it doesn't deserve my hard-earned money. How do you think about it?
Oh, same sort of way. I have a stock short overnight right now, and if it is gapping up tomorrow morning, I might even be out before the market opens. I might be out pre-market. I'm just not going to give it any room to squeeze me and get crazy.
It's better safe than sorry, I think.
Absolutely, and I've learned that the hard way far too many times. We touched earlier very briefly on the fact that I struggled a bit in 2015, and I really got into some bad habits in 2015. I transitioned over to NASDAQ stocks. I got into a period of a few months where I really just wasn't cutting losers, and I was justifying it by saying, oh, NASDAQs are choppier, so I'm just going to wait it out. And I got away with it for 3 months, and then I got crushed on one for a $290,000 loss. And I said to myself, oh, well, I'm never going to make that mistake again. And then I pretty much made it 2 more times since then. I took a $155,000 loss on PBMD, or maybe it was a little more than that, and $100,000 on CANF. And I'll forever remember those trades and remember those tickers. But that's kind of what led to me kind of rebuilding myself as a trader towards the end of 2015 and early into this year. And everyone definitely take a look at my YouTube channel. Just search Tim Grittani on YouTube. You'll see monthly trade recaps going back to November of 2015. Right, I basically just talk about what I did well, what I did poorly, and it's kind of a cool video series because I've been consistently improving now and getting a lot better with my discipline. It's kind of fun to watch the growth. But
Well, it's also, I should mention, from my point of view, because I've seen you take big losses, and I try and warn people like cut losses quickly. You're more of the mindset cut losses intelligently. That's probably why you've made roughly double what I made in my first 4 years. You're more aggressive. But now it's nice for me as your teacher and just as a fellow trader to see getting more disciplined. And I think that no matter how much we warn each other or anybody, like, don't be stubborn, don't take these big losses. You have to kind of experience it yourself so that you understand how crappy of a feeling it is, so that you never want that feeling again. And that's what kind of reinforces the lesson so that you do become more disciplined.
yeah, it's amazing how long it took me to see this. But 3 losses and basically $500,000 combined between those 3 losses. And my number one golden rule now that I've been following all year and that has just been fantastic for me is, if I'm in a situation where I got stubborn and I didn't cut a loss where I was supposed to, I am not allowed to add. And that makes such a world of difference. If the stock is beyond where you plan to stop out, don't try to turn it into a winner, because that is how you take a bad situation and you could make it catastrophic. And I did that far more times than I should have. And I mean, I still do get stubborn sometimes. I make mistakes. I'm human. I mean, everybody is. You can strive to be perfect, but I don't think anyone is going to be perfect. So, I mean, this is like my safety net. This is my plan for the times where I'm not perfect. I don't fight anymore. I don't try to turn the loser into a winner. And my worst loss of the year so far is $16,000 compared to, I think last year it was $170,000 and the year before that $290,000. So it's crazy the difference it makes.
Yeah, I mean, it's all about constant study and optimization, trying to get better over time. This is why I love my trading challenge. Justin, I don't know if you can put up a link to the trading challenge real quickly where people can apply, but the trading challenge is where me and several other millionaire traders give these live webinars, and it's as Tim Grittani just said, it's not a perfect science. We're not perfect at all. It's all about trying to do better and trying to learn from your mistakes and learn from others. This is why I think it's so important to be transparent and to share your trades publicly, and that way, we can learn from each other. What do you think, Tim?
Yeah, definitely. I mean, that's part of the reason. I mean, you'll watch these YouTube videos of mine, and I probably spend 5 times as long talking about my losers than I do talking about my winners. I think the most useful lessons are in someone's losses, and I'm pretty sure everyone watching this webinar doesn't want to take a $290,000 loss. So, I mean, that's the goal.
I took a $500,000 loss, and that turned me to the drink for several years, and I was, I didn't know the value of my rules then. And I know you have a drink right there, but you drink differently than the way I used to drink. Hold up your drink, Tim. What are you drinking?
I don't have a drink.
You finished it. I saw you drink beforehand.
One beer, Tim. One beer.
Exactly. So that's nice at the end of the day. When you have a $500,000 loss, it's not a one beer situation. It's like a one keg situation. And I don't want any of you in that situation. So learn not to be stubborn. Even Tim Grittani and I and every other millionaire trader that I know, we have these big losses where something gets to us where we're just not thinking clearly. Like if you look back and you say, oh, why did I do this? It makes perfect sense. But in the moment when you're betting big and losing big, it sucks. It just sucks. So don't put yourself in that position. I like that rule that Tim Grittani just gave about not adding to losers. Little things like that, little mental notes are so important and can change everything about your trading situation, because I know far too many people who are good traders and they're profitable. They have small profits here or there, but then it just takes one big loss to wipe them out. And this is why I always say, always remember, all it takes is one big loss and you're done. That's it. And you must always guard against that, I think.
Definitely, yeah. And I mean, I do still kind of subscribe to that cut losses intelligently philosophy that you mentioned earlier. But what I kind of mean by that now is like I'm doing it based on points on the chart. Like a lot of people will go in and say, well, okay, if you have to cut losses quickly, I'll take it off if I'm down 1%. And I really am against trying to trade like that because you're going to be stopping out at really, really random points on charts. So for me, it's always been about, okay, what was if I'm trying to buy, what was the last key support level that held on this chart? And that will be my risk point. And if it breaks under there, I need to be getting out.
And what do you wear? We have a question right here, because I have this. This is from basically my question too. This is from Josh in Atlanta, and he says, Tim Sykes, I know you wear a robe sometimes when you trade. I mean, I'm literally in bed right now. This is my bedroom. I work from my bedroom. But he asked Tim Grittani, what do you wear when you trade?
I'm pretty much in basketball shorts 24/7.
So before this webinar began, Tim Grittani said, we have our upcoming conference in September in Orlando, and Tim Grittani said that he's going to be wearing basketball shorts to the conference. Are you going to do that? Now you're on the spot with
I 100% intend to wear basketball shorts to the conference.
All right, Dustin, throw up the link to the conference. We have just a few spots left for the early bird, but September 10th, 11th, and 12th in Orlando, you get to meet me, Tim Grittani, and several other millionaire traders in person. And we're going to see if Tim Grittani can really just wear basketball shorts, or if his wife is going to, knock some sense into him and say, Tim, come on, this is a little bigger than I don't know. What was that shirt that you had? You had a shirt that said like Lego my ego.
Yep, still got it.
Hey, you're gonna be lucky if Tim wears a shirt this time.
Whoa! I see Tim Grittani's been working out, so I'm trying to work out too. We got to compete, but I think answering Josh, it's whatever you feel comfortable. Trading really is a game of comfort. We're not like working on Wall Street where you need these fancy high-priced suits to impress people. What impresses people is, self-confidence and self-sufficiency, and that brings profits. So you can do whatever. I know several great traders who literally trade naked, and I don't want to even picture it because they're not in that good shape and they're not good-looking people, but they do it just because they can. That's the beauty of this profession. It's not just about the money. It's the freedom. We can do this from anywhere in the world. Tim, where were you, in Iceland a few weeks ago?
Yeah, I was in Iceland at the start of April.
Yeah. How was Iceland?
Iceland was beautiful.
That's pretty sweet. I've been to over 100 countries, but I have yet to visit Iceland. And I was pretty stoked to see that you were there. And, you were probably looking at the market and trading from there.
I made myself be on vacation until I got to the airport to fly home. And then I entered into a trade in the Iceland airport that wound up being my best trade of the year up to that point.
I love it. I love hearing that. I made some fantastic trades from the airport in Hong Kong. I don't know what it is about the Hong Kong airport, but I've made like 3 or 4 really good trades. So sometimes airport trades can do well. So I don't want you guys listening to feel like you need like 10 monitors and you need an office and you need a suit. None of that stuff matters. All you need is an internet connection and yourself and your brain. And you need to train your brain. And I can't encourage you enough to, utilize all the hard work that Tim Grittani has put in. From your Trading Challenge students, you have access to Tim Grittani's archive webinars. I think there's like 3 or 4 dozen now. Those of you who have Tim Grittani's DVD, again, we're going to email you a follow-up link to save $1,000 on his DVD. How many hours was it? Was it 16?
16, yeah.
Yeah, 16-hour DVD. I can't encourage you enough to watch it and learn from his success and his mistakes, but his whole journey. And, Tim Grittani, I have to say Tim Grittani so that I'm not like talking about myself in the third person. just congratulations, man. On 3 million and more than just the money. I noticed the change in your trading from you might have had bigger profits in the past, but a lot of it was undisciplined and it would lead to, great risks in the future. And you really tightened your belt. Now you're having, you're still making 140 grand last month. So you're still having the profits, but it's in a new, great way. So you've restructured your game. And that is, I think, what I'm most proud of you because a lot of people think, oh, you're just a trader, like 1,500 to 3 million. Oh, it's one strategy. And what people don't realize is that to do this kind of journey, and my first 4 years, I only got to 1.65 million. But at no point was it one strategy. As a trader, you're always adapting to the market, trying new strategies, trying new patterns, seeing what works, seeing what doesn't. And for you, Tim Grittani, you've had several different strategies, several different, little tweaks to your game over the years. And I think that's what the key to your success has been. But if you want to expand on that, that would be great.
Oh, definitely. Yeah, I'm always trying to adapt. And the biggest change for me really came in early to mid 2014, I think it was, because that was about the time that most of the major stock promoters got shut down. There had been a few halts on the OTC market that really scared people away from trading them. So, liquidity really dried up in the OTC market, and there was very little opportunity there anymore. And so I found myself all of a sudden kind of, in no man's land. I had to learn from scratch all over again. And I could definitely take a lot of elements from my OTC trading and apply it to NASDAQ. So it wasn't like starting totally new. But one of the first things I did when I realized, okay, I need to start trading listed stocks more, I didn't even know if I wanted to be long or short biased or like what I wanted to trade pattern wise in the NASDAQ market. First thing I did was I started tracking anything that closed up 15% or better on the day. It was, $10 or under, and seeing how would it perform the next day. I just did this in a spreadsheet, and I must have tracked at least 100 examples, maybe more, and kind of found through that, hey, okay, like I should probably go into the short bias. That was what the numbers pointed me towards. I kind of just dipped my toe in the water with that, and then I've gotten slowly more crazy and back to looking for really just these parabolic charts and crazy setups. But it's a constant learning process, and even when I'm not learning a new when I'm not learning a new setup, like I said, I've had to learn a lot about myself, and I've had to learn to control my discipline again, and control my risk. And I'm so much more proud of that, I think, than of even hitting 3 million. The fact that my biggest loss is so much smaller this year compared to years past, and that I do have that self-control back. That's really important to me. That is really just such a point of pride for me up to this point this year.
Yeah, well, I think that's the lesson of the day is that as a trader, you always have to adapt to the market. You adapt to learn what you're best at, and it's a constant educational process. Just because you passed 3 million and I passed 4 million, we're both young guys. There's a lot of people who are young out there. This is a lifelong process, and it's a marathon. Like you've made millions in your 20s, so did I, but it's not just about what you can do in your 20s. What can you do in your 30s, 40s, 50s? With modern medicine, 60s, 70s, 80s, 90s, 100s, 200s. The key is just getting the knowledge. And I'm serious about the 200s. I think that, with modern medicine, it's going to be amazing. But you need to get the knowledge and you need to be prepared. Because every single day that you don't have the knowledge and you haven't studied, you're missing out on opportunities. And there might not be a play on any given day, but if there is, I hate people who are not prepared to, profit from it. There's nothing worse than seeing a great setup and seeing somebody being like, I don't see it. I don't know what you're talking about. So I think for me, the key to my future success, and a lot of students watching this, their success, is studying right now from the present and from the past so that you can be better prepared for the future. What do you think, Tim?
Oh, definitely. That study is so key. I'm looking at new stuff every night. I'm making new spreadsheets pretty frequently still. I'm always.
You have 10 spreadsheets? That really, I was betting on 1,000. I knew that was a little too much, but I figured maybe like 600.
Well, what I typically do is I'll start tracking a new setup that might interest me, and I'll track it for a month or maybe 2 months, and then I'll get comfortable with it, and I won't need to track it anymore.
Ah,
You can just like throw the spreadsheet out, and then just start on the next type of thing.
so how many spreadsheets have you started and ended? That's got to be close to 1,000.
No, nowhere close still. Nowhere close. My spreadsheets are pretty simple.
All right. Well, that's good for you guys watching because that means that it's easier. At first, I thought that he was like a spreadsheet monster, but
Oh no, it's nothing like that at all. And I think I even have a blog post, like a basic example of spreadsheet building is what it's called.
I just figured you had like
exactly how I approach it.
I thought you had hidden spreadsheets everywhere and like hidden computers and backup computers in like Switzerland, and that's why you went to Iceland to look up like new spreadsheet softwares or something like that.
No, I mean it's no magic formulas or anything like that. I mean I really just use them more as a guide and just try to see what I can see through tracking a setup over time, and then from there I'm just trying to filtrate each setup as its own thing.
Awesome. Well, thank you.
In the back of my mind.
Thank you again for doing this. I think that's a good way to end this by saying there is no magic formula because both you and I have turned a few thousand into a few million. We've achieved what most people deem to be impossible. And, you more than me in your first few years. But it's not one magic formula. It is hard work. It's, practice. It's study. It's learning about yourself. And it is possible, but, you have to have the right mindset. Not everyone is going to be a millionaire. 90% of traders lose money. The vast majority of people only want hot picks. So you have to be knowledgeable about all of these facts and try and do better. And try and, be the next Tim Grittani.
And I mean, one thing I want to kind of say with that though is no offense, I wasn't trying to be you when I started out. I wasn't trying to mimic your strategy. I wasn't trying to think to myself, what would Tim do in this spot? I was focused on me. I was focused on, keeping myself comfortable in trades, trading the setups I was good at. So that's what I think everybody should do is, focus on yourself, focus on what you need to do to be successful and where you're at.
Well said. Very well said. We're just individuals. We have different personalities. We have different patterns that we feel comfortable with. I think the main thing with your story and my story is showing people that it's possible. There's a lot of people who claim to be millionaires. They don't show every trade on how they got there. They don't show every strategy. And just to show the adaptation over the years. I made my first million buying in a bull market. I made my second million shorting in a bear market. Adapting is the key. And whoever the next millionaire watching this will be, their path will be different from yours or mine. But it's possible with enough hard work and study. That's the whole point of it. It's not luck. It's not fraud. It's just strategy. And you're going to have to deal with losses. You're going to have to deal with your own emotions. And I think that even while you make this money, you'll learn a whole lot about yourself. I think that's what I'm proudest of with myself. And that's what it sounds like the point that you're at, where you're prouder that you've developed into a better trader in the past few months than just making, $3 million.
Definitely, for sure.
So, all right, guys, we're going to send you some emails with special coupons and special free webinars just as a thank you for tuning in. I know it's nighttime. Some places around the world it's morning. So thank you guys for tuning in. And thank you, Tim Grittani, for sharing your story. Congrats on 3 million and your beautiful marriage and your self-sufficiency, most of all.
Yeah, thanks for putting this together, Tim. Thanks for everyone who tuned in. It's a lot of fun.
Awesome, guys. See you later.
My name is Tim Sykes, and I teach people to trade stocks. I am a self-made multimillionaire.
So this is the ideal trade that I'm going to talk about. I want you guys to understand every single aspect of this trade.